The street cools off from the session's highs with the Nifty back below the 23,800 mark with broader indices edging into negative territory. IT, however, remains robust after recent lows while FMCG, pharma and auto lend support. PSU banks, real estate and metals drag. The much dreaded fuel price hikes are here, but not as dreaded as or not as much as expected. Elevated crude oil prices and continued disruptions in the Strait of Hormuz increase pressure on OMCs. Petrol and diesel prices in Delhi as well as Mumbai and all of India have risen by rupees 3 a litre each, with similar hikes seen across the country. Tata Motors PV is soaring after a good Q4 with profitability beating estimates despite margin pressure at JLR. Management remained optimistic on FY27 growth backed by strong SUV and EV demand. Sheila foam surged after reporting a strong Q4 helped by robust mattress demand, margin expansion and benefits from the Kurlon integration. Meanwhile, Muthut Finance slipped despite strong growth as higher provisions as tonnage came off and therefore Muthut is down. Tata Steel is expected to report a stronger Q4 aided by better steel realization and improving spreads. Investors will closely watch commentary on European operations where losses are seen narrowing sequentially on higher prices and improving volumes. Hello and welcome. You're watching Closing Trades here on ET Now. I'm Harsh Saita. Very quickly on the Nifty, we're up around 10% now. We're going away all of the gains which we started the day with. We did very well at the start of the day at least, but we've given all of those away. In fact, from the day's high, we're down around a percent in trade. So you're seeing some bit of pressure creep in. We hit a high in terms of the day's high at 23,731. No, we've in fact opened at 23,731, I beg your pardon. 23,839 is where we hit a high. We're down around 0.5% thereabouts at around 23,712, so around 140 points of the day's high is what we're notching at this point. My losses on the Nifty Bank, the Nifty IT, though holding up firm and steady, has done very well in the day's session today, and IT continues to hold up very well for itself. Within the Nifty Bank as well, the private sector banks seem to be doing relatively better versus the PSUs. Let's pull up the likes of an HDFC Bank, an ICICI Bank, an Axis Bank, Indices versus an SBI. 1/3% higher even now on an HDFC as well as on an ICICI. So really the play seems quite decent in terms of the private banking pack. The Nifty PSU Bank on the flip side, seeing some bit of pressure, 1.5% lower on SBI as a result of that and or as a consequence of that. What we're seeing in fact across the board is cuts within the Nifty PSU banking pack, 1.4% lower on the Nifty PSU bank. Broader markets, let's quickly pull up the Nifty mid cap and small cap indices, see how they're doing in trade. Whether the pressure of the Nifty 50 index is also reflecting there. The Nifty mid cap down mildly, 1/5% thereabouts lower. The Nifty small cap index also down around 1/3% thereabouts. So broader markets not really participating much. Let me go across in fact to Karan. He's here with all of the stocks in news. Before I dissect some of these trends with Kunal Bothra, who's joining us in just a minute or so. Karan.
Let's start off with Fujiyama Power Systems. The company has reported a good set of numbers, wherein the EBITDA has doubled to 170 crores. Moreover, the EBITDA margins have also expanded by 200 basis points. The company has announced the commissioning of its 2 gigawatt solar panel manufacturing facility at Ratlam in Madhya Pradesh. Followed by data patterns, the revenue has declined 13% year-on-year to 344 crores. However, the EBITDA margins are at a 13-quarter high level. Sheila Foam is buzzing in trades today on the back of the company posting a very strong set of Q4 earnings, wherein the PAT has surged 7 times to 91 crores, with margins jumping to 11% from 3% year-on-year. Sai Life Sciences, while the revenue and PAT grew 4% and 18% year-on-year respectively, the metrics fell short of the street estimates by 4% to 8%. Sigma Advanced Systems, the company has won a 100 crore export order from a customer in North America to supply filled fuses for the 155 artillery shells. And finally, we have Skipper in focus as the company has won a fresh new order of 1,265 crores for several domestic and international T&D projects. On that note, the company's order book stands north of 9,000 crores with a book-to-bill of 1.5 times.
Okay, thank you so much for that, Karan. Yes, so Skipper as well in focus, a very large order win, reflecting on the order book now in terms of the size. But let me bring on board Kunal Bothra as well. Kunal, what do you make of the move on markets? There's been some softness, right, as the day has gone by?
Yeah, some softness, some extra bit of volatility, which I think was not something which was anticipated. Even though, of course, the markets are into a range as such, but the movement towards the highs and the lows have been a little bit more, more numbered. So maybe I think in that sense the markets are a little bit more volatile. We've still not been able to break past about the 23,750 mark, which we were anticipating, in the morning, because had the markets broken past about those levels, we could have, possibly reversed the course of the indices over the near term. So maybe that goes into the waiting yet again for the index, and we hope that start of the next week is where the index is able to scale past about the 23,750 mark. But today is a day where there have been fresh trends which have emerged in few sectors. Like for example, you've seen auto stocks, you've seen IT stocks seeing some bit of short covering, but largely the index is still into a flattish kind of a trading range.
Okay. Let me, in fact, switch focus onto an ET Now exclusive. Now, the entire of Adani Group wasn't focused today, but continues to remain so. Sources tell your channel that the conglomerate and the group head entity, which is Adani Enterprises, seeks to raise the promoter equity stake in Prakash Power Ventures from 24% to a majority of 51%. The 24% equity stake in JP Power is currently owned by Prakash Associates. That was acquired recently by Adani through an insolvency resolution process. Anurag Joshi brings us the details of what he's hearing on this one.
Adani Enterprises is mulling on a plan to raise the promoter equity stake in Prakash Power Ventures. Adani is seeking to increase the promoter equity stake in JP Power to 51% from 24%, sources have told ET Now. Prakash Power's parent, Prakash Associates, had been in insolvency proceedings, and on March 17, the National Company Law Tribunal approved Adani as the successful resolution applicant for acquiring Prakash Associates. And the resolution plan of Adani Enterprises approved by NCLT was for a total of 15,300 crore rupees. Now, Prakash Associates, as a promoter, they own 24% in Prakash Power Ventures. And this Prakash Power Ventures is a power producer and has commissioned a few power projects so far. The raising of the promoter equity stake in Prakash Power Ventures, sources tell us, could happen once the recapitalization of Prakash Associates is concluded, and it can happen through the parent JP Associates books. So JP Associates raising their stake from 24% to 51%, or it can also alternately happen by Adani Enterprises funding the transaction itself, that is infusing the money on its own. Prakash Associates, currently the share capital is at zero. That is according to the NCLT order. So Adani Enterprises has to recapitalize, so it is infusing funds. So to start with, it's about 800 crore rupees according to the resolution plan, and over and above that, Adani could be infusing more money into Prakash Associates. So once that recapitalization exercise is completed, Adani will be looking at increasing its stake in Prakash Power Ventures, sources tell us.
Okay, thank you so much for that, Anurag. Kunal, let me come to you. There's been a fair bit of choppiness on some of these Adani names, right? Even in trade today. Yesterday, of course, they were doing very well for themselves. Let me quickly, actually, first, before I go to Kunal, pull out some of those names and try and flag them off. In terms of Adani Power, the stock is down 1%, nearly 1.2%. ITD Cementation and Sem India, whatever, is also down around 1% thereabouts. You're seeing Adani Green, some amount of pressure there as well. Adani Ports is in fact up 1.6%. It was down in trade at the start of the day, but it's reversed in trade 1.6% higher as we speak. Adani Total, Adani Enterprises also seeing mild gains. Kunal, within that Adani pack, anything that's standing out for you?
Yeah, I think Adani Power is something which looks attractive from the pack. Adani Enterprise, I think even though the last 2 or 3, 4 days the stock has run up a little bit more on the steeper side, the indicators are into a tad bit overbought territory. But I think closer to that 2,400, 500 mark is a good zone for Adani Enterprise, for traders who've looking to buy Adani Enterprise on dips. Adani Ports today has confirmed a breakout for itself. So there are a lot many names from the pack which are looking attractive at the current levels.
Okay, Kunal, you were suggesting that on the Nifty at least, a 23,750 kind of level, if we close above that, it's positive. How critical is that? And what are we exposed to if at all we don't hit that 23,750 mark? Will we still be very, very range bound? You just aren't that bullish if we don't hit that? What's the sense?
No, so I think it's a matter of time over here, because if the market takes maybe another couple of days to try and surpass about those 23,750 levels, that's absolutely fine. It's the nature of the market and the trend and happenings across the globe, specifically with crude. Just 2 days back was at 104, 105 levels. We are now talking of crude oil prices back at 107, 108 mark. So I think on the back of this, there's bound to be that extra bit of volatility for the indices. But this level of 23,750 is very important, because in the previous leg, when the markets went to a correction, we highlighted earlier that 23,750 is an important support. Now, the moment we managed to break below the support levels, we saw almost like a 500, 600 points kind of an immediate correction for the Nifty. So that's why I think on the way up, this test and the breakout of 23,750 is going to be something which is very, very crucial and important. So, for a short-term trader, waiting for another 40, 50 points on the upside to get a confirmation is absolutely fine. But I think it's better to try and wait for that confirmation and then try and take a trade on the index.
And between the banking indices, the Nifty, PSU and private bank, suddenly we are starting to see some bit of outperformance creep through, right? And to some extent, it's because of the underperformance that the PSU bank index is clocking, and some of it is because of the outperformance that private banks are clocking, more so because of the underperformance of PSUs. What do you view this in terms of a trend, Kunal? Is this something which is an opportunity in terms of a buy on dips for PSU stocks, Nifty PSU banking stocks, or would you for the moment completely avoid that basket, and could there be upsides in the private banking pack?
Yeah, in fact, I'll do the latter over here, Harsh, because I think the private sector banking names are looking a little bit more better poised than the PSU banking names, at least in the last few days. Because on the back of that selling for SBI, or the vicious selling, if I can use that word, for SBI, you've seen PSU banking stocks suddenly succumbing to some sort of selling pressure. Now that puts possibly the private sector banking names into a slight better position. Now, for example, what happened yesterday? Now, yesterday was one of the classic days where you saw the Bank Nifty showing a phenomenal recovery, and that was led by large cap private sector banking names, namely, I think HDFC Bank, which is up 3%, so on and so forth. And the PSU banking stocks, they recovered from the intraday lows, but did not close into a huge positive for themselves. So that tells you that the markets are going into a tilt where maybe the private sector banking names could start to emerge a little bit more better from the current levels. So for someone who's looking at a basket or maybe initiating stocks within the banking names, I would sense that preferring the large cap private sector banking names, the top 3, 4 names, the likes of HDFC Bank, ICICI, Kotak Bank, I think that could be a much better bet.
Okay. All right. So those are some names. I'll also quickly try and get Kunal's take with regard to levels he's looking out for on some of those private banks. But I need to quickly pause here, because what's played out is we've heard from the IMD, and they're saying that the monsoon, the southwest monsoon, is likely to hit Kerala on the 26th of May, which is 5 days early, mind you. We were expecting El Nino conditions, but likely despite that, the monsoons may actually hit us early, which is obviously welcome. It's positive. Hopefully, we are able to maintain maybe 95, 96% long period averages, which the current forecast seems to suggest will be 92%, which is materially lower. So we'll try and hope for that to also play out. But for the moment, in terms of timing, we're seeing rainfall to come in 5 days ahead of schedule. So that's the other piece playing out. Tata Steel is expected to come out with Q4 earnings as well. Revenue, PAT, both expected to grow on a QOQ basis. Ashesha here to tell us what the street is expecting.
Well, yes, higher steel prices are likely to aid Tata Steel's numbers this time around, and that will aid realizations and EBITDA per ton on a sequential basis. Now, remember, Europe losses are expected to moderate this time around on a sequential basis. So, we are expecting EBITDA per ton loss for Europe to come in at $4 per ton versus $10 per ton loss that the company had reported in the previous quarter. On a consolidated basis, revenue is expected to come in at about 62,500 crores, an increase of 10% on a sequential basis, and EBITDA could see a jump of about 16% on a quarter-on-quarter basis. Management commentary for European operations and steel prices and demand environment will be very crucial, but all in all, higher steel prices are likely to aid realizations and EBITDA per ton. Despite the surge in coking coal prices that we've seen on a sequential basis, we are expecting strong set for Tata Steel this time.
Okay, strong set expected for Tata Steel, as has been the case with JSW as well, largely in line. But auto giant Tata Motors PV reported its Q4 numbers. Revenue and was in line. EBITDA and PAT were a beat, in fact, versus street. In fact, during the earnings con call, the management expressed confidence in the demand environment and growth outlook for FY27, while highlighting strong momentum across segments. Listening to a slice of what they had to say.
However, I must confirm that the geopolitical tension has been since Feb 26. And when we see the demand in April and May, it has remained very strong. As you know, we are in the middle of May, and when I see the data, the demand remains very strong. So I still feel that the momentum of what GST 2.0 brought has been continuing. That momentum continues to go forward. Yes, there might be some mixed change in terms of powertrain preference. Maybe electric, CNG might get preferred if there is a potential increase in petrol, diesel. There might be some impact in the entry segment if the hikes are very high. Otherwise, I don't think so. It will impact the momentum too much. So right now, basis, it will be completely dependent on the quantum of increase that we see in petrol and diesel. But as of now, as we speak, the demand remains very strong. There's no question of changing the long-term product plan that we have. We remain optimistic. As we are speaking, as I said, the demand remains strong. I'm very confident that the growth still can be around 10% in FY27, plus minus here and there if there is a significant impact of geopolitical reasons, if because of petrol prices, diesel prices, or any other factor, which is the driver of PV sales that gets impacted. It might still be, 1 or 2% here and there. But the industry seems to be pretty much on track for 10% kind of a growth rate. And with that kind of a thing, and we having a very strong pipeline of new products this year also, at the same time we have the last 6 months of products which will continue to get a huge demand in this year. So we have a industry beating growth scenario, and there's no question of stopping or postponing any of our capex on products.
Welcome back. And some stocks that continue to be on our radar is IT, 1.2% higher on the Nifty IT index. So IT is really the one which is bucking the trend, doing very well for itself. Media is the other one. A bunch of media counters buzzing in trade. You've got Nifty FMCG, which is up 0.9%. Some defensive coming into play today, Kunal. But you seem to be bullish with regard to the private sector banks. And in terms of levels, your top favorites you suggested was HDFC and ICICI, I believe. And if so, what are the levels you look out for on some of these names?
Yeah, so I think these three names are emerging as slight resilient candidates. In fact, on a day like today also, and comparatively, a day like yesterday, where these stocks they showed strength. So for HDFC Bank, what I'm looking out for is a potential retest, or at least coming closer to that 800 mark, say 795, possibly in the next few trading sessions. The support for the stock is around the 760 mark. It's currently trading at 770, 775 zone. ICICI Bank, on the other hand, on the short-term basis, it looks like that the major part of the selling from those 1350 levels is behind. The stock is stabilizing at the 1250 levels. So I think on the short-term basis, we can expect the stock to come back towards the midpoint of this 100-point odd correction for ICICI Bank. So that should be closer to 1285, 1290 for the stock price. And Kotak Bank is a different case altogether, because the stock is actually looking quite strong in terms of a potential breakout. The stock is at a multi-day high on the short-term charts, trading strong indications from the short-term momentum indicators, and that I believe could probably result into the stock hopefully breaking past about the 400 to 412 barrier. So broadly, for the private sector banking names, I'm expecting that over the next say a week or so, there should be at least another 3% to 5% uptick.
Another 3 to 5% uptake over the next few days on private sector banks. And Kunal, if there is someone who's holding a position in PSU banks at this point, what should he do? Exit?
No, not exit. There are two ways. Either you can churn your trading positions, assuming if they are say closer to your cost price, towards these private sector banking names, because the chances and the probability of these stocks performing could be a tad bit more higher. The PSU banking stocks, and if someone is looking at this as a long-term play, then you don't want to tinker around to those large cap or maybe the tier 2 large cap names on the PSU banking names, because many of them have shown phenomenal price uptrend over the last 1 to 3 years. So it depends on the kind of time frame, the buy price for these investors. But largely, I think traders could look at a hold onto these stocks. It's just about a cycle of underperformance for PSU banking names vis-a-vis the private sector names.
Interesting. And let me in fact go across to Meryl. She's standing by with regard to some of the stocks that you want to keep on your radar for this afternoon. Meryl, what's on your list?
Yes, these are some stocks that we've seen buzzing in today's trade. Starting with Global Health, doing business as Medanta, the company's reported a revenue of up around 25% on a year-on-year basis, and they've also seen profits surge 46%. The company's in fact seen tremendous volumes for the full year FY26, with their volumes with their patient volumes growing quite a lot. Inpatient volumes have grown 16% year-on-year, while outpatient volumes have grown almost 19% on a year-on-year basis. Moving on, Chambal Fertilizers, though in terms with respect to their estimates, they've reported quite a mixed bag of a quarter. However, their EBITDA margins have seen a lot of improvement. EBITDA for the company has surged over 55% on a year-on-year basis, and its margin as well has expanded more than almost 2 to 300 basis points. The company has also reported a profit up almost 30% on a year-on-year basis. Moving on, India Glycols as well has reported quite good financial as well as operating performance, with the company's biofuel segment supporting its growth, with revenues up 13% and profit up almost 30%. So quite a bit of leverage playing out over there as well. Now, moving on, Solara Active Pharma has seen a bit of a turnaround in its financial performance. The company's reported a profitability this time around compared to a loss from last quarters, with the company's net profit at 9.7 crores versus a loss of 4.8 crores. Now, this was aided by strong revenue growth. Revenue for the company has grown by almost 42% year-on-year. But however, there was persistent weakness that the company has seen in its ibuprofen business, which continued to weigh down its margins. We've seen margins contract by almost 70 basis points in the company. Meanwhile, we've seen almost the opposite play out for Gen Irrigation. The company actually slipped into the loss this time around. They've posted a net loss of 12 crores versus a profit of almost 30 crores in the last year, which was driven by exceptional items. But adjusted for this, the adjusted profit after tax was seen rising almost 11.6% for Gen Irrigations. So yes, these were some stocks that we've seen buzzing on the back of their fourth quarter updates.
Okay, thank you so much for that, Meryl. Let me bring on board Kashyap Javeri, who is from NK Investment Managers, joining us this afternoon to give us a perspective on how he's looking at markets. Kashyap, great having you. Give us a sense. What are you advising your customers, investors right now?
So, what we are advising our investors generally is that this kind of corrections which happened in the month of March ideally could have been used for, making a fresh entry into the market. If they wanted to top up, they should have ideally done that. And April has been quite positive for us. So the portfolios or the strategies have given a significant amount of returns in the month of April. I think this kind of turbulent times where you probably have something like a war or any kind of sort of, a bit of black swan event, we always advise our clients to use that volatility to their advantage. If they are sitting on the sidelines, maybe they could, put in more money into the market, and fresh positions ideally can be initiated in this kind of volatile times.
Where should those fresh positions be initiated? In what sector, segments, pockets are you liking?
So we continue to remain bullish or quite positive on within the market on auto ancillaries. That's where we have put in some bit of more money. We remain quite positive on the capital goods side. Incrementally, if I look at overall market, private banks are looking quite positive given the valuations have derated meaningfully. A lot of fears regarding the margins or in terms of asset quality have not materialized, and we do believe that in terms of asset quality for at least medium, slightly medium term future, we are not going to see any negative coming from the asset quality side. So private banks is one space where we are quite bullish on. The fourth segment where we are quite bullish on is within pharma, contract manufacturing, including contract development and manufacturing. That's something that we are quite happy to put our money into.
And within contract manufacturing, could you give us some names at all? Are you allowed to talk about certain specific stocks that you're liking?
Not really, but
okay.
I would say that, there are this, without giving out names, these are the large names in CDMO segment or in contract manufacturing segments. Most of them are leader in this particular sector. And that's where I would probably leave.
Okay. All right. And with regard to infra, Kashyap, I wonder if you have a specific preference within that infra basket, and could valuations there look good from a risk reward standpoint?
So I think overall infra, our exposure is quite limited given that the cyclicality on the businesses is quite high, and the second part is that for most of the players, the end consumer is usually either government or a government-owned entity. But I would say that given the government's push to the overall infrastructure and the fact that it's now getting even more and more decentralized in the sense that state governments are also participating in infrastructure creation quite aggressively. Even at local levels, the authorities are quite getting aggressive in terms of infrastructure push. That's one segment where probably a lot of order intake would continue. But like I said, we have stayed away from it given the fact that largely there is probably one end user sector for them, for those companies, and we have very little exposure particularly to the infrastructure space.
Power? Would you at all have exposure there, and how would you play power as a theme?
We do have exposure to power, but in a different way, in the sense that our exposure to utilities is not very high. It's very limited. But there are other ways to look at power sector as such. So I could invest in companies which are probably the suppliers of components or supplier of equipment to those companies, where there is significant amount of lesser risk in terms of whether you could look at in terms of tying up the raw material or tying up in terms of selling the power to utilities. These are the companies which are also quite strong on their cash flows and the balance sheet management. So we do have exposure to power, but it's more indirect than directly to the utilities. But yeah, we do have exposure indirectly to the companies which supply components or equipments to some of these companies.
Everything that's playing out in the global marketplace, Kashyap, how are you viewing the risk of West Asia on India earnings if things were not to get resolved? Is there a risk there to your thesis that you go out and buy, it's a good time?
So I think if you look at near term, Q4 numbers particularly, I think about if I look at Nifty 500 or Nifty mid cap 150, about 60-65% of the market cap has already declared numbers. April numbers, so far as the numbers which have already come in, I don't think they have been in a sense bearing any brunt of West Asia crisis as yet. But our conversation with a lot of companies during the month of April and towards actually May suggests that supply side now is getting more and more constrained, both in terms of supplies as well as in terms of pricing of the raw material also. So I think Q1 is going to bear some bit of brunt of those elevated raw material costs or supply side constant as such. But like I said, if you go back in the history, I mean, Russia and Ukraine war started exactly around towards the last week of February 2022. If you look at crude oil prices, they peaked out during the June 2022 months. From June 2022, those prices only went down. As and when this West Asia crisis, it gets resolved, and we see the opening of the Strait of Hormuz, which all of us are waiting with our bated breaths to open up. A lot of these fears will get dissipated, right? So they will disappear. If you look at the generally earnings post September and December 2022 quarter, in that period we could see sort of quite handsome earnings bounce back that came in at that point of time. I think similar playbook should play out. You will see some weaker numbers coming in Q1. I think it's a fait accompli. A lot of people have that idea that Q1 has seen a supply constraint, it has seen raw material price increases, something that will have to be passed on to their own customers. Our conversation with a lot of companies suggests that the conversations are already on, and partial price hikes have already been rolled over to the customers. Not to the fullest extent, but a part of that price increase has already been passed on. But I would say that if there's West Asia crisis, as it gets resolved, I think things should come back to normal. We don't have an idea about when that will happen, but probably if the sand mines prevail, that should happen sooner than later. And that's when I think you will see market taking some bit of fresh air out of it, and you will see market moving as the earnings also move. In the meanwhile, this volatility, like we did in June 2022 quarter also, that volatility ideally can be used to put in more money in the market. It's volatility is always a friend of an investor if you use it rightly.
Okay, Kashyap, going to have to close this conversation for the moment. Thank you so much for coming in and speaking to us, giving us those views.
Sure. Thank you so much.
Right. Fuel price hike, that's played out, of course, today. Petrol and diesel prices hiked by approximately 3 rupees per litre, marking the first major fuel price revision since the prolonged freeze that began in 2022. Petrol prices have risen by rupees 3 per litre across the country. Hike comes amid elevated global crude prices, ongoing disruptions in the Strait of Hormuz, and it's just days after Prime Minister Modi's pitch for austerity. Ankit joins in with a ground report from Jammu on this one.
Let me show you the price hike in Jammu. It's almost about 99.63 rupees per litre. When it comes to the diesel price, it is almost about 88.31 paisa per liter. So it's an increase in the price hike of when it comes to the diesel and the petrol. There is a mixed reaction from the people across the country regarding this price hike when it comes to the petrol and the diesel prices. What we are getting to know is that the people are giving a mixed reaction. We will try to connect to the people over here who have come to fill their fuel in the vehicles. We will try to connect to them. Let's talk to some of the people over here. Sir, एक मिनट. आज 3 रुपए पेट्रोल, एक मिनट सर, आज 3 रुपए पेट्रोल जो है वो बढ़ चुका है. आप कैसे देखते हैं? प्रधानमंत्री ने भी अपील की थी कि पूल करे, पब्लिक ट्रांसपोर्ट का इस्तेमाल करे, लेकिन आज 3 रुपए बढ़ा है. आपको लगता है कि आम जनता के असर पे, जेब पे असर पड़ेगा इससे?
असर तो पड़ा है. हाँ. तो नेचुरली हर अगर पड़ रहा है अभी धीरे धीरे ही सबको, जैसे कि लीटर में 3 अगर जब बढ़ता है तो बहुत ज़्यादा कम होना है तो 30 होता है तो बहुत बड़े खुश होते हैं कि हाँ 30% कम हुआ है. जब 3-4 रुपए जगदम आगे बढ़ जाता है तो वो भी देखना चाहिए ना.
आपको लगता है कि बाकी सेक्टर्स पे भी फर्क पड़ेगा?
वो तो पड़ेगा. अब धीरे धीरे शायद जैसे इसमें बढ़ा है तो शायद आगे भी बढ़ सकते हैं.
These are the voices from the Jammu, and there is a mixed reaction. What we are connecting to the people, they are saying the indication was given by the PM. He has given advice to the people of the country. When you are going outside, you should poll. You should use the public transport. But today itself, 3 rupees has been a price hike in the diesel and the petrol. These are the mixed reactions which we are getting from the ground. And in Jammu, there is almost 99.63 rupees, which is current rate of the petrol, and about 88.31 paisa, which is current rate of the diesel in Jammu.
Okay, thank you so much for that. Ankit, we'll let you go on that note. Thanks so much for getting us that ground report from Jammu. But VAT rate cut. Maharashtra has in fact cut the rate on VAT on ATF to 7% from 18%. The revised VAT rate will be effective immediately. So that is something that you will want to keep track of. Interglobe Aviation, let's pull up the intraday chart. Let's try and see if there's been any move at all on that, even though this is just Maharashtra specific. So I'm not so sure how much of an impact that may have, but maybe more states may likely follow as a result of that. Seeing a bit of a spike on the stock from the day's lows, of course. But we'll slip in a very short break, continue coverage on the other side. We'll start talking stocks, plenty to speak to Kunal about as well. So stay with us here on ET Now.
Well, the currency, that sure continues to grab headlines, and now it's breached that historic low of 96 to the dollar. That's where the rupee is currently, and that's softened by about almost 27 paise as we speak right now. And that, of course, has been a key niggling worry, right? Which is why you've seen the, one part of the FI exodus can be linked to this particular story, that because of the currency weakness, it's not really making sense to deploy money into a market like India. So sharply lower as we speak right now. Coupled with that, for the equity markets also, it's been a very, very volatile day. While right now we're lying flat, let's see in the next 45 minutes what direction we take. But other than those earnings reactions like, a Crompton, United Spirits, Tata Motors, PV, you're not really seeing much support come in from some of the key heavyweights. Yes, there is a Bharti which is holding out. Technology as a trade is holding out well. But even pharma has been unable to latch on to the kind of strength that it had been showcasing the last 2 trading sessions. Well, there is a DRL which is still up about 2.25%, but there too, the ride has been extremely volatile, as you can see on the Nifty Pharma Index also. Titan is okay, 1% higher for Interglobe Aviation. You're not seeing any meaningful move on the gainer side other than, of course, Tata Motors PV. Today, of course, you know, there's metals trade. That's taking a step back. So Hindalco, Tata Steel, these are all your rank underperformers. Reliance is down over 2% right now on the futures. That's definitely weighing heavy on the indexes. L&T is a drag, and so is BEL along with Bajaj Auto. And look at the kind of volatility. Eternal was one of the key movers to start off trade, was holding up 3% on the opening tick. It's completely reversed its trend right now. It's down about 1.25% as we speak. 241 is where that stock is. But let's move on and let's address another exclusive piece of news. Sources are telling your channel that after PM's austerity call, the oil ministry is expediting an incentive plan to support city gas distribution companies with a proposal in a final stage. What is that proposal? Let me take it across to Prakash Priyadarshi, my colleague, and address the same.
Well, after the PM's call, the oil ministry is expediting an incentive plan to support city gas distribution companies. In fact, sources suggest that the proposal is at final stage to support city gas distribution companies for laying pipeline infrastructure that will connect compressed biogas plants to the city gas distribution network. A very significant development coming in amid the Prime Minister's appeal to promote judicious use of petroleum products, along with efforts that should be made to save foreign exchange going forward. In fact, a scheme worth rupees 6,000 crore has been finalized by the oil ministry, and that will be sent to the Indian cabinet for its approval very soon. The scheme has been finalized with consultation with Ministry of New and Renewable Energy to promote CBG blending with natural gas. In fact, the target of CBG blending with natural gas likely to be enhanced to 10% from existing 5%. And the objective is to enhance CBG with natural gas, which will support government to bring down its import bill as far as natural gas imports are concerned. And therefore, efforts are being made wherein target will be enhanced when it comes to CBG blending with natural gas. And therefore, the proposal has been put on fast track, and that will be sent to the Indian cabinet very soon.
Okay, thank you so much for that, Prakash. Let me go across to Srishti. She's standing by with the FNO update at this hour, powered by 5paisa, as is always the case. Srishti.
Well, yes, lots happening within the FNO basket, and when we last touched upon the FNO data around 1-ish, it was indicating that the open interest addition was there, but the excitement on Nifty and Bank Nifty wasn't visible, and because of that, we are getting to see right now that markets are at the day's lowest point. And firstly, with respect to the Nifty futures are actually trading at a discount of 15 odd points, and we are seeing almost a 0.3% of a cut coming in on Nifty 50. Now let's talk about Nifty Bank as well. More than 250 points of cut is what we are getting to see. Back at 1 p.m., the premium was close to 145. That has now shrunk to 90 premiums only. And add to that, it's a cut in the open interest as well. That is seen to be declining, and even the price action is on the negative side. So that is definitely indicating that there is pressure, and the derivative data is validating that. Now let's talk about some of the Nifty Bank components which are showing some bit of an excitement. Back then also we have seen HDFC Bank, Axis Bank, SBI, BOP, BOI. The list is long, where we are already seeing short build-up happening. Even longs are getting unwinded in names like IndusInd Bank as well as AU Small Finance Bank. But Federal Bank, interestingly, long build-up is seen to be happening. Even the price action is on the positive side, 1.3% gain. And even ICICI Bank as well as Kotak Mahindra Bank. Only these three candidates are having a long build-up and trying to lend some support to the banking index. Now let's talk about what the option OI change and the chain is telling us. So right now, it's 23,800 that is seeing the maximum call writing. Definitely, the call writers want the markets to be below. So that is going to be one of the key resistance. But in terms of the put, 23,700 is trying to lend some support, because put writing is seen to be happening over there. So that's about the Nifty OI change. Option OI distribution. Here here is the picture wherein 24,000 call writers are active, but is really too far from the spot levels, while 23,500. So that's going to be the broader range for the markets. That's a 500 point of range that is right now visible with respect to the option data. Let's move on and let's talk about the individual movers. We have been talking about the fantastic results for Tata Motors, but option data suggests that it's the short covering that is lending support to Tata Motors, still holding on to the gains of 5.5%. Crompton, just a result candidate, 4% uptake, while United Spirits, very good set of numbers, but long build-up is happening over there. So interesting data build-up for United Spirits. Future losers, Muthut Finance, short build-up happening, not a great set, 7% decline right now at the day's lowest point. Hindustan Zinc really mirroring the kind of fall that we have seen in silver, short build-up over here, and even HAL, the result candidate, just yesterday we have seen a 5% decline over here. Let's move on to some of the other interesting data and option interest gainers. It's Muthut Finance, Vedanta, as well as HAL. They are seeing the most of the option interest right now in terms of the build-up. 29 to 10% of the gains in terms of the options is what we are getting to see, and the price action is reflecting that. And lastly, open interest losers, Keynes Tech. We have already seen almost a 20% decline yesterday, and even today it's a 3% cut coming in over here. Polycab, here too we are seeing some bit of a pressure. Longs are getting unwinded here, while short covering support is for Tata Motors PV, like we discussed a while back. So that's about the FNO data and the picture. Back to you.
Okay, thank you so much for that, Srishti. Let me bring on board Naveen Mathur, because the rupee has slipped to a fresh record low. Naveen Mathur of Anand Rathi share joining us this afternoon for that perspective. 96.06, Naveen. That slip on the rupee continues. Give us a sense, this has been a non-stop slide now. Can we continue to expect this to play through?
Thank you very much, Harsh. As we speak, it is 96.12 right now.
Yes.
From the yesterday's close of 95.768. Now, the fundamental reasons remain the same. There's a pressure on the current account deficit. The oil prices are continuing to be buyed up because of those constraints on the Western Asia crisis, the Iran and everything, which is making an havoc on the oil prices. So I think overall trend per se, because of the oil, because of the continued pressure on the FIIs, outflows, the rupee definitely is depreciative. At the same time, the dollar is gaining strength. Means we are at around 98 and 99 for the dollar index. So I think the dollar index strength, the internal problems with respect to the current account deficit because of the high oil prices, the FII outflows continues. I would say that all these factors are definitely making pressure on the rupee, and which is, I think, more to do with stubborn high oil prices and persistent outflows. So that's where we are strained with respect to the rupee against the dollar.
Right. Naveen, I also want to talk about RBI and the policy response here, because the RBI has been intervening to try and defend the rupee, but reserves have been shrinking. At what point does that intervention become counterproductive? And do you think a better strategy perhaps would be for the market to find its true value of the currency?
It's a very difficult call at this particular point of time. You're rightly so that from around $728 billion of reserves before the start of this war, I should say end of February, we are currently at around 690 or so billion dollars. So the RBI has utilized around $38 billion to take care of the rupee depreciation against the dollar. I would say that $28 billion, I think, has been used in only 1 month, which was March this year. So I would say that RBI is looking forward. They are fighting to control the depreciative stance, but in spite the India position be little strong than the other countries, still we are suffering because of the global macroeconomic environment on which we are dependent upon. So we import about 85% of our crude oil from overseas. So that's one of the major factors where the rupee and the rupee slide is, I would say, is continue to be seen. The other point which I would say is that the gold import duty has been high. So that was something to cushion for the rupee slide as far as the outflow on the imports are concerned for the dollar. So I think the RBI and the government is cognizant about the fact, but it's very difficult to say what level the rupee should settle down. And therefore, there has to be certain interventions not to have a very strong slide on the downside.
But if the conflict does drag on and we don't see a meaningful cool-off, Naveen, on the oil prices, which are still well above $100 to a barrel, would 100 perhaps on the currency also be a realistic picture?
Looks like to be now, because if the Brent or the WTI continues to be 100 plus, as we speak, the WTI is at 104. And around 109 is what the Brent is. And our basket seems to be at around $150 for India. So I think that pressure would continue to be there. And if, say, for example, the RBI doesn't intervene, there is a possibility of rupee finding a level of around 102 against the dollar.
And Naveen, of course, RBI likely to take certain action, but what's the sense like with regard to the government? What action and what measures can they take to stem the slide? Because obviously this is painful both ways.
Yes, you're absolutely right. So means one of the data points which I missed out earlier speaking about was the trade balance number. 259 was the last month, $259 billion was the last month trade number. This time it has come to around 283,000 something in terms of the dollar per $1 million. So I think that is another pain point as far as the trade balance is concerned. But I think the RBI has a wherewithal. We have 11 months import cover as of now, as where the forex reserves stand. And as RBI, Harsh has already spoken out earlier, they're not defending any level, but they don't want the volatility of the rupee against the dollar. So what they're trying to manage is the volatility, and they're not defending any levels of rupee. So they also want the rupee to be stabilizing or finding its own way against the dollar, and rupee has always found out the way. We have seen the crisis in 2013, again 2022, and again today. But then I think the rupee has found its way. And it's not a far away time. And I don't think so that the rupee should not settle around 95, 96 to find its way and consolidate where it should be. Basis the fundamentals of India where we stand today.
Even Naveen, the other piece has been the consistent FI outflows, right? That's also been hurting the rupee. Any way in which we can stem the tide there at all?
See, the bond yield, the spreads on the bond yield is one of the major factors, plus the risk averse for the FIIs. And everybody is more looking forward to park their money on the safe assets, of particularly the safe haven assets. So means in March itself this year, the FI outflow has been around $11 billion against the full calendar year 25, where we saw around $19 billion. So I would say that it is more of a fear factor. In spite of fundamentals, as I said, remain strong. It's more to do with the fear factor which we have currently in the geopolitics, and therefore it is making people jittery to continue to have the positions even for a country like India, where the fundamentals are pretty strong as of now.
Okay, thank you so much for that, Naveen. That's, of course, the take on the rupee. Pressure continues. But, you know, the other one, which is also in focus, is gold and silver. And, Kunal, I wonder if on charts, how is gold and silver looking now? I mean, if at all you've been tracking it.
Yeah, so I think on the short-term charts, it actually looks like that, both these asset classes are at a major resistance point. Gold, particularly, I think from this 47.50 mark on the dollar terms. Silver, I think, just about a day or two back had come back to a 90 plus mark on the dollar terms. We're seeing some sort of a retracement of sorts into both these asset classes. The short-term indicators are in that slightly overbought territory. So my expectation is that possibly in the next few days, you might see both of these asset classes as of now cooling off. But there's no major trend when I look at this over the 4-month, 5-month, or maybe a medium-term kind of a time horizon, because that sharp sell-off which had started off from Jan end for both these asset classes, where I think gold was at $5,000, $5,500, and silver was 110, 115 dollars mark. I think from those aspects, we are still into a corrective phase, but it's just that on the shorter term degree, maybe on the daily charts, the indicators are a tad bit more overbought.
Let me also bring on Ambrish Baliga, market expert, market analyst rather, joining us on the show today. Ambrish, gold financiers, Muthut came out with numbers. Tonnage shrinking. Well, the management seems to suggest there's no concerns whatsoever. Stock down 6%. What do you make of it?
No, tonnage shrinking clearly is a sort of a worry because that shows that the volumes will go down going ahead. And especially if we see a correction in gold, I think that will be another worry for this company. So after the sort of a move which we have seen in the last so many months, in fact, the last 1.5 to 2 years, I think it can cool off. And that cooling off could be even to levels of about either 12 to 15% from here.
Manapuram, Kunal, what's your view?
Yeah, I think this is a sharp correction for Muthut Finance. I think a 6%, 7% down for the stock price. This probably just about dents the prospect of any kind of a major recovery which is coming back into the stock a couple of days back when there was this news on gold prices. So I think that puts the stock back again to a multi-week low. I think we've broken past about the last 4 or 5 weeks low for Muthut Finance, breaking below the 33.75 mark. So that stock definitely looks now on the slightly weaker side. We would probably expect that after today's sell-off, there could be a possibility the stock may test 3200, 3225 mark, which also coincides with the previous swing support for the stock on the short term. With Manipur Finance also, on the other hand, I think at 315 levels, the stock has taken multiple resistances. I think the last 3-4 days, 315, 317 approximately has been a major band of resistance. And from there, the stock, or there's some sort of a supply or a resistance which is emerging for the stock at those higher levels. So till the time the stock is unable to surpass those levels, my expectation is that maybe it could be a mild corrective phase for this stock as well.
You know, in fact, we chatted with the management as well this morning, and with sharp uptick in gold import duty and tighter import measures, keeping domestic gold prices elevated, what is going to be the impact on gold loan demand? Hear it out from George Alexander Muthut, the MD of the company.
See, when the customs duty has been increased, immediately the price of gold went up. The customs duty increased by 9%. Next day, the price of gold increased by same 9%. So the people who have gold with them, the value has increased. Now, whether this is going to impact the gold loan business, actually, we, or all NBFCs, including Muthut, we finance only gold ornaments, only the gold ornaments which are already with the public. There is about 30,000 tons of gold reportedly in the system in jewelry with the public of India. And today, not even less than 5,000 tons have gone into the organized gold loan market. So there is still a lot of gold ornaments with the public in India, which can come into the market for this. So we don't need a new ornament to be or new import of gold to help us to have gold ornaments. We are looking at the gold ornaments which are already there with the public, which is so huge. I said 30,000 tons, and only less than 5,000 tons have come into the organized market today. There is room for more gold to come. It is only the mentality change. So as soon as people feel more comfortable in monetizing the ornaments, they will come for gold, either to a bank or to NBFC, etc.
Welcome back and thanks for staying with us. You know, among some of the buzzers is Sheila Foam. We spoke with, in fact, Rahul Gautam, who's the chairman, managing director, and he sees margins expanding above 12% in FY27 with expectations of better average selling price going ahead. That will likely drive the margins higher as well. 10.5% up, even though it's off the day's highs. Listen in to a slice of the conversation we had.
So if we look at a little closer to that number, it's actually more than between 10 and 11. It's about 11 plus. and already trending towards a 12 number. So what I expect in the FY27 is something we had committed to 12 plus number, and I think we are close to it. As far as the level or the average selling price of the product is concerned, it continues to be where it is. Should be a little better. So these are very nascent times as far as Tata is concerned. It's doing well. It has enough orders on hand, and the targets for this year are close to about 130 crores. So that's like doubling where we are. We closed the year at 70. So last year we've added about 600. A similar number of around 500 stores would be added. They're already in the pipeline.
Okay, that's the take coming in from the Sheila Firm Management. Just looking at the market texture right now, and it's quite interesting the way we've seen those spike of volatility today. About 0.3% lower right now, 23,640 is where we're currently at. Well, the index number may not really give you any reason to worry about. But look at the index composition right now. Other than IT and some of those currency trades in pharma, a reason why DRL and Sun Pharma may be holding out, you're not seeing any material strength. There's the Tata Motors PV, which is up 5.5%, but metals, Reliance, some of the consumption names, banks, they're all languishing in trade as we speak right now. Within the broader end of the market as well, the tilt is towards the decline. So Muthut, of course, is one such case in point. Look at HAL, that's cracked 5% in trade. Hindustan Zinc is down 5%, Voltas is down, and IOC as well, even after the fuel price hike, that's lower by about 4%, so hasn't seen any material respite come by as we speak right now. But Amrish, just wanted to know whether, looking at the way currency has been, it still makes sense to increase one's pharma exposure?
I think the currency would remain, I suppose, in this range unless, of course, your crude cools off and the FIs start returning. And I think that's at least some time away. So from that point of view, yes, I think one can be investing in pharma because that's one of those safer hiding spots, especially in a scenario like this. And again, there I would possibly go with the top line of pharma companies as compared to the small cap or the mid cap funds.
Okay. Rajesh Palbe also joining us from Axis Securities. Rajesh, great having you. How are you viewing the move on the market today?
Yeah, good afternoon, Harsh. Good afternoon, everyone. So market is volatile and still not able to take out the major call concentration area of 23, 750, 800 zone, which is very important and crucial for the market. So until the Nifty not able to take out 23,800, I think short covering action is still pending in the market. Though we have recovered from the lower level, 23,300, 400 has attracted major put writing activity. So that has confirmed some base building activity for this correction. But still the resistance are very stiff at this juncture. Major call writing is still attracted at these strike 23,800, 23,700 zone. For Bank Nifty is still struggling to cross a major supply zone of 54,500, 400 zone, which is very important and crucial for Bank Nifty. Though Bank Nifty had attempted to move around those levels, but still made to the supply pressure. A lot of volatility in the global market also. So traders and investors are a little cautious at this juncture, and profit taking is happening in the market at higher level. The sectors where we have seen, some outperformance are also, witnessing some profit taking at higher level. Very few select themes are still holding the ground, like pharma, metal, capital goods, some of the capital market related stocks. So these few pockets are still holding the ground. Even power stocks are also still holding the strength on the near term, short term chart. So very few opportunity at this juncture as markets are volatile. Continuity of buying interest is not there in the market. So I think in these 3-4 pockets, one can find out some opportunity on the long side in these kind of market.
Right. Okay. An important update that the world is, of course, closely been monitoring. Trump finally wrapped up his Beijing summit with Xi Jinping, calling it calling the visit incredible and claiming that the two sides had settled a lot of different problems. Trump also said that the leaders discussed trade, Iran and the Strait of Hormuz, adding both countries want the critical shipping route reopened and oppose Iran obtaining nuclear weapons. Sumita Karir, my colleague, is here with the latest updates.
That's right. It was day 2 of talks in Beijing. Trump and Xi, they hailed a new era of China-US ties. In fact, both the sides, they spoke on tech, trade, and Iran. In fact, these are some of the things which were in focus. Remember, President Xi said that the international situation is fluid and turbulent, and the US and China can only gain from cooperation, and they will lose from confrontation. Meanwhile, if we speak about the Chinese side, well, China issued a warning on the Taiwan issue, and it said that it could create a highly dangerous situation if mishandled. On the other side, he also told CEOs, including Elon Musk, Tim Cook, amongst others, that China is going to open wider. However, the reforms, etc., that all of these companies, they have to bring about that in China. Meanwhile, President Donald Trump has hoped that US and China ties will be stronger and better. He also said that fantastic deals have been made, be not given to understand anything because a readout on the final meeting has not really been shared as yet on what the final outcomes of this meeting was. But President Donald Trump, while speaking to press, said that a lot of different problems were addressed. He also spoke to Fox News, and he said that President Xi is not going to give military aid to Iran, and China has agreed to buy American oil, soybeans. He said on the Iran war, important commentary coming in, that I won't be very patient and Iranians must strike a deal. And this is something, whatever it is, that President Donald Trump has spoken about, to Fox News, in his press briefing. That was also reflected in the White House readout as well, wherein it was said that President Xi made it clear that China's opposition to the militarization of the strait, and of course that he expressed to purchase more American oil and reduce China's dependence on the strait.
Okay, thank you so much for that, Sumita, for coming in and giving us that update with regard to US and China, what's playing out. A couple of power stocks which are buzzing in trade today, including the likes of a TD Power. Stock is perked up 10% or so in trade. Wasn't perked up as much in the morning, if I recall right, but those numbers really having an impact now on the stock price. Numbers obviously came in yesterday, but we didn't see that move in the morning. What do you make of the move, Kunal?
Yeah, I think the stock has moved in the last, I think, 3-4 months from 780, 800 levels to now almost 1300 marks. So the run-up has been very steep. I think at this point, it's a bit of a difficult situation to try and initiate or buy over here for TD Power, because the stock now seems to be coming into a deep overbought territory on the charts. Today's volume is one of the higher volumes the stock has shown. However, I think with the price run-up and the market setup, I think it's better to avoid and not initiate a buy over here.
And Balaji Amines, second straight day of very solid gains seen on that counter. Rajesh, what's the view there?
Yeah, so Harsh, stock has moved up very sharply in last couple of trading session, and looking at the overall structure, we believe that stock is now managed to surpass its falling trend line resistance area on the monthly chart also. So there is a sign of trend reversal on the long-term chart also. So now if stocks continues to hold above 1640, 1650 zone, I think that next upward momentum we could see towards 1700 to 1700 to 1750 kind of level. So I think one can hold the position. Another leg of up move we can see towards the 1750, 1800 kind of zone. So hold the position.
Okay, that is the take right now on what Balaji Amines is up to. But PN Gadgil, that's the other stock which has been languishing in trade on the back of extremely weak set of Q4 earnings. The margins have contracted about 200 basis points, and the profit also has dipped about 40%. Stehi is here with more details on what went wrong this quarter for them.
Well, yes. So if I take a look at PN Gadgil's numbers, let's start by talking about what the operational performance has been like. The revenue has come in rather good. In fact, it's a beat versus what the street was estimating on the revenue front at 3,531 crore rupees. The estimate was around 3,250, and it's almost doubled. In fact, it has slightly more than doubled on a year-on-year basis. So the revenue part looks good. What is not looking good for them is the EBITDA that's coming at 131 crores, which is up 40%, but it is much below what the street was estimating at 210 crores. Similarly, for PAT also, we've seen almost a 40% jump over there also, but yet again, much lesser than what the street was estimating on both of these fronts. And consequently, you've got EBITDA margins that have come in at just 3.7% compared to close to 6% this time last year. So a massive fall of more than 220 points on that front as well. Let's understand what has not worked for them, and in fact, what has caused the pressure on the bottom line despite the top line being so good. It was factors like employee expenses that rose 32% on a year-on-year basis, and their other expenses have risen by 157%, so more than double on that front as well. And these are some of the factors that have weighed really heavy on PN Gadgil's numbers this time around. If I take a look at the same store sales growth, this number looks really nice because for the quarter four, this number has come in at a very solid 86% on a year-on-year basis, and overall FY26, this number is up by about 43%. Segment performance looks good for retail, e-commerce and franchise. And if I take a look at the other factor that could be slightly weighing on the numbers is the parity that we're seeing between the value growth and volume growth. So a lot of this growth that we're seeing on revenue is led by the price hike in gold and not meaningful volume selling from their end. And that is also why another reason why PN Gadgil is in pressure, because gold category has seen 120% volume growth but only 27% volume growth. Similarly for silver, the value growth has been 246% but the volume growth has only been 37%. And that is the divergence that is playing out right now. Before we had all of these details in their quarter four update when we only had the same store sales growth number and the revenue number. Remember, the stock had surged that day on the back of a good update, but now that we have more color, the stock is seeing quite a sharp fall in trade. And in terms of their FY27 guidance, the company had during its update hiked their FY27 guidance to 13,500 crores of revenue from 11,500 to 12,000 earlier. So that's a 25% uptick over there. They're aiming to add 27 stores in FY27, taking the total to 103. And lastly, the EBITDA margin guidance is around 7.5%, which is much higher from the number that we've seen right now at 3.7%. So long road ahead for PN Gadgil, and the stock is immensely under pressure as we speak.
Okay, thank you so much for that, Snehi. Ambrish, let me come straight to you with regard to some of these jewelry counters. They were in focus on the back of the numbers that have come through. What do you make of the numbers, and how should one read into the commentary now, given the fact that you've got that import duty which is coming in on gold, and of course import duty plus which takes gold prices up by 9%.
Yeah, and especially after PM Modi's appeal, I think most of them would have to change their business model, at least temporarily in the sense, at least for the next 1 year, that it'll be more on the recycled gold than new gold. And the way the duty also has been imposed, it's going to be quite expensive. Already we have seen the gold prices going up, so because of which the volume is also coming down to a certain extent. So overall, if you're asking for the next 2 to 3 quarters, I think most of them will have margin issues. And you just see the PN Gadgil's numbers. Clearly margins have fallen, and I think it can fall a bit more because of all these issues which are there. So for the time being, I think one should stay away from most of these jewelry stocks. Maybe take a fresh view in the next 1 or 2 quarters.
Ambrish, how are you looking at Tata Motors PV's numbers? The India business did quite okay, while of course it was a neutral set from JLR.
That's true, but again, we should remember that JLR had that issue. In the last couple of months. Hopefully, going ahead, I think that should be settled, and because of which we should start seeing better numbers as far as JLR is concerned. So at these levels, I would still be a bit positive on Tata Motors.
Okay, that's the take coming in on Tata Motors PV, perhaps the one resounding winner in trade today. There's of course the IT trade also, which is holding out. DRL, Sun Pharma looking okay. The Adani group of names, let's bring those up for you on your screens and how they are doing right now. Adani Ports, of course, is one which is holding out about almost 1% in trade. But Adani Enterprises has cooled off and given up its gains, and especially given the fact that it was one of the key performers in trade yesterday. Kunal, now what trajectory for these Adani names?
Yeah, I think on the short-term charts would still be positive for many of the Adani group of names. I think it's just that on the very very short-term basis, you've seen these stocks moving up by I think around 8% to 10% in the last 3-4 days. For example, Adani Enterprise was almost at 2,450, 500 mark. That stock has jumped about 2,700 levels. So you want some sort of stability coming back into these names, and you don't want to buy these stocks at the extreme, even though the price uptrend looks to be on the stronger footing. So I think for someone who's missed out on the previous leg of this rally for many of the Adani group of names, it's better to wait for a mild bit of correction, say a broad 4%, 5% correction from the swing highs for stocks like Adani Enterprise could be a good advantage. Adani Power, I think, has done very well for itself. That stock has climbed about the 200 to 215, 20 mark quite comfortably in the last many weeks of the price uptrend. So buying the stock on correction, say closer to 205, 210 could be a better price point rather than buying at current juncture.
Okay, so that's with regard to Adani group of stocks, of course. Kunal, in terms of the outlook with regard to some of these chemical names, including the likes of Balaji Amines, what's the take that you have over there?
Yeah, I think it's been a fantastic last 2 days for the stock because from those 1320 levels post the gap up yesterday, the stock has done phenomenally well. But the only concern which happens over here is that we are in that phase of the market where suddenly after a gap of like 2-3 days, when a stock does very well for itself on the back of higher volumes, it doesn't make sense to buy these stocks at the high point because there's bound to be a point because of the market volatility that these stocks provide you that odd phase of correction. So buying this on dips could be a better advantage rather than buying at the current juncture. I would look at say possibly 1600 mark, 1560 as a good starting point for someone who's missed out earlier.
Rajesh, some defense names, the likes of a Solar Industries came out with numbers, also came out with commentary, very strong in terms of the guidance. What's your take there?
So very strong run up in this counter, and looking at the overall structure across all time frame, the stock is exhibiting a bullish structure only. The way stock is now approaching towards its all-time high trajectory, I think if it continues to trade above 16,900 mark, I think the next target on the high side we may see towards 17,800 to 18,200 kind of zone. So I think those who are already on the long side of trade can hold the position. In minor decline, one can add also with stop loss of 16,900. On the high side, 17,800 to 18,200 would be the next target for solar industry.
Like this, Ambrish, this one trades at 10 times 1 year forward sales. It trades at 1.5 or 1.6 lakh crore in terms of market cap, is guiding for 14,000 crore in terms of top line, which is a 50% growth versus current year. How do you rationalize this, and what within defense would you play, if at all not this?
No, I missed the name, Harsh.
Solar Industries. Apologies, Ambrish.
Solar Industries has been a leader in that segment of defense products. So I think the performance which the company has been showing, I think that will continue even going ahead. And consistently, if you see the margins, they've been quite high consistently, all in the region of 26-28%. So I expect the growth to continue. And if you're talking of the next, 4 to 5 years, yes, I think we could see much better levels than where it is right now. I'll not be surprised if you continue to see that 15% sort of a CAGR as far as the stock is concerned.
Okay, just a minute and a half left to go before we wind up for the day. Rajesh, as well as Ambrish, we'll let you go on that note. Kunal, thanks to you as well for joining in. And today, of course, has really been one of those very choppy days. In fact, not just choppy days, this has been a very, very choppy week for us. That big gash down on Monday and Tuesday, some recovery which came by on Wednesday, absolutely quiet yesterday, and then today, of course, that volatility has kicked in again. So shutting shop at the 23,634 level on the index, down about 66 odd points. Over the week, of course, it's been quite the painful ride. To think of it, we breached below that 23,700 key support, and fell almost to that 23,300 thereabout mark. And then from there, we've seen about a 300 odd point recovery, which has come by. But volatile for the metals, volatile for the key benchmarks and key index heavyweights as well. But on closing basis, you've got a Tata Motors PV, which is held out today. Crompton, like we've been flagging off. Solar Industries, United Spirits, Madison Sumi has been a rank outperformer today. And then, of course, there are lots of losers. Muthut, HAL, Hindustan Zinc, IOC, Voltas. There's been Vedanta as well, which lost about almost 3% in trade. Cochin Shipyard, which lost about 3.5% as well in trade as we speak. Yesterday, of course, it was Keynes, which cashed down about almost 22%. And today as well, it's lost another 3% in trade. The way the breath has actually opened up in favor of the declines in the last 1 hour is a little uneasy of a feeling. But to be fair, today the broader markets, or rather the global markets as well, have had it rough. I mean, look at Japan, it lost about almost 1250 odd points. You had Hong Kong as well, lower by over 400 points, and Shanghai as well, lost about almost 1%. Similar has been the price action across the European index as well, or indices. Stock 600, as I speak right now, is down 1.5%. It's an over 400 point knockdown for the DAX as well, 1.5% lower for FTSE, and 110 points lower for the CAC as well. And the FTSE MIB, by the way, is now headed in for an 870 point decline. The pre-market rates for the futures as well for the US markets are also indicating quite a bit of weakness this afternoon. 1.25% lower pretty much across the board. The Dow is down 370 points. NASDAQ futures are now headed in for a 500 point decline.
Well, but that's a story for Monday, of course, with regard to those US indices. But you want to keep your eye out on that, because what will likely play out is those cues will come our way come Monday. And we're seeing some of that rub-off effect already happening on our indices at close. So obviously we've closed with some bit of weakness. Sectorally, a tilt, IT was positive, FMCG was positive, Pharma was positive. Auto closed with a mild bit of green, but Realty down 2%, metals, PSU, banks. I mean, these have been the sectors, at least Realty and PSU banks have been sectors which have faced some part of the brunt during this latest correction that we've seen of sorts on our own markets. Defense even otherwise down 1.5% odd. The Nifty bank down 0.5% thereabouts, and therefore that weakness keep creeping through across. When you're looking at the Nifty mid cap and small cap, around 0.5% of cut is what we've closed the day in at. Out of time on this edition of Closing Trades. From Aisha, myself, everyone who puts this show together, thanks so much for watching. Stay with us here on ET Now. More action to follow.